Yo, what's going on, everyone? Welcome to DOL Simplified. If you're watching this video, I'm assuming that you struggle with finding a bias, being a part of the actual trend, and essentially just knowing where the market is going next. And I was in that position too, and I used to go through hours of content and I could just never figure it out. So the goal of today's video is, of course, to put that in the simplest form for you to understand. Starting with what we have on the left, high resistance and low resistance. Obviously, what is high resistance? It's going to be that rate of liquidity tapping into a high time frame fair value gap, or PDA, price delivery array, and then of course the displacement out of that to make sure that it actually is, manipulation. What is low resistance? It's going to be trend line liquidity, unmitigated fair value gaps, equal highs and lows, failure swings. So you can see that right here. We have trend line right here, equal lows, failure swings with that unmitigated gap. And then disrespect versus respect. This is the sauciest part of today's video. So make sure that you pay attention in my future examples that I'm about to bring up, right? Disrespecting versus respecting is the relationship between conditions or between fair value gaps. This is how you actually confirm which side of the market we're going to, whether we're going to go higher towards obviously the highs or lower towards the lows. You need disrespecting versus respecting using conditions to actually make sure that you catch the right trade. Let's get right into it. Going into example number one, right, you can have this checklist that's cool, right? Everyone knows how to find high resistance. Everyone knows how to find low resistance, but what actually confirms which way we go, right? What confirms that we're going to take that low resistance? What confirms that we're going to reject from the high resistance? Well, that is where disrespecting versus respecting comes into play. Now, a lot of y'all are probably questioning like, okay, how do I find narrative? How do I find the understanding of price? Well, disrespecting versus respecting gaps is probably like the easiest way to go about it without racking your brain too much, right? Well, let's just go over the chart here right now. So we have low resistance, we have previous day low, unmitigated gap. Cool, we have that low resistance. And then we obviously have the raids on liquidity. We're respecting this higher time frame imbalance and we're displacing. That's great. But what actually confirms that we are going to reject from here and that we are going to draw to these lows? Well, you go into the lower time frame, still the high time frame, but it's going to be the 1 hour, and you simply wait for a new condition to be traded inside of to then confirm the future moves. You can see we respect this 1 hour gap to a tick as well, right? We wick above that 50% of the gap, the CE, and we close below. Now, obviously, I'm not going to really go deep into executions. I will show y'all a trade on this DOL later because I did end up trading to this draw this day. But this is exactly what confirmed it, right? We had disrespected a 4 hour gap, defending that low resistance. So that was my first confirmation that we go lower. And what sealed the deal was the fact that we started respecting bearish gaps. That's the key part, right? You can disrespect something, but to actually have the full picture, we need to start respecting that other side of the market, that being bearishness. And you can see we absolutely bleed out after respecting that gap. And we do what? We make another gap. Now, I'm not going to go deep into entries right here. If you do want to see the recap of this trade, I'll go ahead and put it up on the screen right now. You can click that. I'm not going to be doing a whole breakdown, but you can also apply the same exact things we were talking about earlier, right? This same exact thing, disrespecting versus respecting. Obviously, if you're wanting that trade. Now, I know that my chart is kind of messy. This is that 4 hour gap. That's the 1 hour gap. This is that new 15-minute gap targeting that unfilled 1 hour, right? You have the same thing. You have low resistance on the low time frame. We're printing high resistance, right? Sweeping out that liquidity inside of this higher time frame imbalance. There was also an SMT right here, so that's not a failure swing. And then we start doing what, right? What actually confirms that we're going to eventually take this low, because now we are in the same exact scenario. I'm going to go ahead and clear out my chart, right? But we do have that 15-minute gap above around here. And now we have a 5-minute gap right here. So how do I know that we are actually going to take out these DOLs below us? Well, you simply wait for disrespecting versus respecting to actually show itself, right? We're clearly respecting the gap and we're actually closing below CE of this fair value gap. It doesn't have to be an inverse. You just have to see price not respecting that gap, because guess what? Not respecting is disrespecting to a certain extent. Of course, having that inversion is going to be the best, but you can see price simply burns through this entire imbalance. This confirms lower. And then again, what do we do after this? We make a new gap, right? We make a new bearish gap to continue this disrespect versus respect, right? We wick into it, we respect CE, and we burn through. That's how you confirm your DOLs. And this video isn't rocket science either. I'm not trying to show y'all some hidden concept. I'm trying to show y'all the simplicity of trading. I'm only using liquidity and imbalances to get to this final picture or this final decision that says, okay, I'm going this way, right? All of these traders try to tell you like, oh yeah, focus on this, that, and the third. And there's this whole there's this whole checklist you got to go through. Trading does not have to be that difficult. You truly only need two things: high resistance and low resistance, and then disrespecting versus respecting. It can be that simple. That's the simplest way to find your narrative, to find your bias, and to execute it on it, right? Remember, go check out that video on this. Let's get into example number 2. And so going to example number 2, this is actually the day right after previous example, but also yesterday's price action. And everyone was kind of torn apart this day. Why? Well, we have this bullish trend. We had just swept out all of these lows, and we are respecting bullish gaps right here, continuing this trend, disrespecting gaps right here, as well as another one right here. So everyone, for the most part, was bullish going into this day, but we ended up having a bearish DOL. So what I'm going to be explaining here is how to adapt to the DOL when you're wrong, right? Because you will have a moment in price action where you're thinking one thing and you get told another, and you cannot marry that bias. So going into today, I'm essentially just going to explain what I saw, right? So obviously 15-minute, yeah, I can recognize we do have this failure swing on this low right here, that being the unmitigated 4-hour gap, and then obviously the 1 hour or 4-hour swing. But we have slanted liquidity with daily liquidity above, so we're kind of torn apart. And of course, I'm just going to follow the trend rather than, just pattern trade criteria, because yeah, we might want to take out these lows, but that's not confirmed until what? We disrespect bullishness and respect bearishness. This is why criteria will never have more power than narrative, right? Because it is all about what price is doing, not what price has, right? So you can see at this moment, a little bit after this, we end up printing an SMT and we end up burning through this entire range. So how did I suddenly, obviously apart from just displacement, flip my bias and actually get back on the winning side of the market? Well, it's simply through understanding the relationships of imbalances, that being bullish imbalances and bearish imbalances, right? So at this moment, we're trading inside of this entire 2-hour leg. We have these multiple 2-hour fair value gaps. We swept liquidity, right? In the same way that you have the criteria, that being the RAID, the obviously the PD array, and then you would expect the displacement, right? You have that right here. You have the rate on liquidity. You have the PD array, that being the fair value gap, and you somewhat do get displacement on the low time frame. I wouldn't call it anything crazy, but you can see whenever we run lower, we do have a little bullish leg that people thought was going to bring us higher, right? You can see right here, we're disrespecting bearishness. But why does this not matter apart from obviously being the low time frame? It's knowing the overall narrative at this point, right? If you simply just mark out this 2-hour gap right here and you mark out this other 2-hour gap right here, it becomes abundantly obvious that we are not going to be bullish, because why would we print an entire candle that burns through this gap, right? We burn through the CE of this gap, that being the most significant part because it is equilibrium, but we damn near close through them on the 5-minute, right? That's not what you want to see. And obviously, we could go back to respecting, right? This could just be a higher time frame wick, but you confirm that by doing what? You mark out, obviously, if you have bullish gaps, you need a bearish gap. And all you're waiting at this point is to see what price does. You have liquidity above, you have liquidity below, even though I did that in the opposite order anyway. You have all of this criteria, but none of the confirmation of said criteria. Up until you see displacement out of this 5-minute, you don't know what's going to happen. Right now, obviously, you can see we start disrespecting bullish, again, respecting bearish. So that does confirm it. But a lot of people got chopped up today because they thought, oh, yeah, we're in a gap. We have the criteria. I'm just going to trade it. It does not matter. Now, obviously, narrative goes way above this. I am going to be going more in depth on narrative in a future video. But disrespecting versus respecting is essentially the easy way to kind of cheat yourself into finding the narrative of price. But again, right, notice how simple this is. Simply just waiting for a gap tap after a gap tap and you see which side wins, and then you place your bets. That's the benefit of trading. You don't have to place your bets before you know. In a fight, right? If you're betting on, let's say, the UFC, you have to place your bets prior. Imagine you could place your bets after you see someone starting to, stumble. You're about to see the knockout, all of this stuff. Let's say you're placing a bet as they get put in a chokehold, right? You are literally placing a bet as soon as you know who's going to win. That is what you can do in the markets. That's how simple this can be. Don't overcomplicate it. And that's going to wrap it up for the video, but because you are one of the few people that obviously watch the very end of these types of educational content, I'm going to be giving you the best sauce that I didn't drop for the majority of the video. So go ahead and drop a comment, say something like referencing this, but this is the key to narrative, why we reject and why we draw. And you can think about this again in terms of liquidity. So let's say you have an example where we swept out liquidity, we hit an imbalance. Well, an example of why we would reject, right? Let's say we mitigated that fair value gap, we swept out London lows. We would reject because price does not have an availability of draws. These go hand in hand. If there's no reason as to why we would draw lower, then that's the exact reason as to why we would reject, right? We've swept out all available liquidity. We've mitigated an imbalance. Therefore, there's no high quality draws lower, so that is the reason why we reject. And then the same thing vice versa, right? If above, let's say we printed low resistance liquidity, there's unmitigated gaps above in the form of, let's say, a 15-minute, a 5-minute, in the same reason that you wouldn't want that at your stop loss, because that's a bad reason to reject. This is now a great reason to draw. So you can think about it in terms of availability of liquidity and imbalances for your trades, right? If there's nothing below and everything above, that's exactly the trade that you want to be in. That's the exact reason of why we would reject this low and why we would draw to this high, or vice versa. That is my final sauce. That also is a little sneak peek at the slideshow on win rate that I'm making for 2026. If y'all have watched my content, or if you're new to my content, check out my channel, look at the most popular videos and watch the win rate video I made. It is by far the best piece of content I've ever produced, and I am revamping it for 2026. I think I had like 5 slides, or like 5 key points that I covered. In this next one, I have 9 key points, obviously referencing the old ones with a little revamped, explanation of them. But there's going to be 4 key characteristics that I'm adding to increasing your win rate. So stay posted for that. This is a little sneak peek at what that's going to look like in that slideshow. And anyway, I hope y'all enjoy. I appreciate you staying for the entirety of the video. If you do like my content, obviously drop a comment, fucking like the video, do whatever, subscribe. See, I don't be doing this YouTube stuff, so I'm not really used to that. But yeah, I hope you have a great day, and I'll catch y'all in the next one.